Hey guys, this is Market Update. In this video, we're going to look at a bunch of metrics and other data, just showing how strong Bitcoin is in terms of investors wanting to own the asset, which is really important because the whole trade here with BTC is knowing that Bitcoin fundamentally is a lot stronger than other types of asset you want to save money in over time. You're investing in this thing. You need to know that Bitcoin is strong, right? And it has genuine strength over other assets. But also the trade here is that we are still in the early stages of the growth and adoption of the network. So like I say, the kind of trade of our generation, the sweet spot where we know what it can be, and we're just literally waiting for that to take place. But we obviously need to know that from the data. So we'll look at that in this video. So we have bounced from this support level here. We're just back into the consolidation zone. Nothing really much is on the horizon. It's still summertime, not much is going to happen, but we've got, the Fed rate cuts, probably starting in September. That's an easing cycle. I would suggest that the US probably wants the dollar to weaken a little bit. It's got way too strong. That's not great for their industrial base, so maybe they want that to weaken a little bit. Tends to be a good time for risk assets and BTC. So rate cuts, you have most central banks around the world cutting rates, trying to ease, weakening their currencies. It's good for risk assets. That's the general trend I see. So the next 12 months, it's going to be very volatile. We know that, but generally, that's a bull market, right? We're in a kind of currency weakening phase, where the States is really saying, hey, we've done what we needed to do, and now we're just coming off the gas a little bit. Generally, a bull market, generally pretty good news for risk assets. So for right now, just another consolidation, but the next 12 months is the Bitcoin bull market, right? We've all seen that. So if you do trade, check out Bybit. You can get $30,000 deposit bonus. If you make a deposit on there, check the link below for the details. Ultimately, the Bitcoin trade is just so incredibly simple. More people storing more of their wealth in it over time. That's it. Now, you can use that over different time horizons, I think. So the longest time horizon, Bitcoin's been in existence for 15 years. Price has gone up in cycles, but generally, more people are using it and storing some wealth in it. And so price goes up over time as more people join and store the wealth in there. Now, the price has gone up in dollar terms, but also you can measure the wealth creation of Bitcoin, which is I'm using Bitcoin, I'm saving in it, and then I'm just waiting for the free market to create wealth and opportunity over time, which actually in a neutral currency like Bitcoin would mean that you just simply spend less of the Bitcoin on the things that you want over time, right? So as the market creates wealth, as we as humans create wealth, wealth is essentially creating abundance of products and services. If you have a neutral currency with a capped supply, that would actually manifest itself in just spending less Bitcoin on the things that you want over time. So those two things actually make sense, right? You have an expanding fiat currency supply that's just going to make it appear that Bitcoin is going up in price in those dollars. Now, if you want to measure your life in dollars, that's fine. But you can also measure it via wealth creation of products and services, which a neutral currency like Bitcoin is going to actually accurately measure. So inflows into BTC is essentially saying, are fiat currencies going to continue to expand in cycles? I think the answer is yes. They've literally done that since their creation. So why expect anything else now? So short time horizons and long time horizons. Here, the short time horizons where you can very clearly see some outflows forcing the price down. We had Germany selling as well, but inflows now. So essentially what's happening here is that what we've been doing for years with HODL and buy the dip is now happening on a much larger stage. And that's going to continue to be happening over time. As Bitcoin gets larger, it's like a snowball rolling down a hill. It just picks up more and more and more and becomes even more desirable, right? So game theory in practice, and we can see the last few weeks, inflows have been pretty decent as well. The best performing ETF of all time, bar none. So what we can see here as well, this is settlement volume. Bitcoin settlement volume, it's not near Visa, MasterCard, right? Anywhere, near that right now. It's not near the SPX, which is the S&P index, and gold is still a long way away. So again, I think this is actually good news for an investment case because we have something that we know the strengths of BTC versus all of these other assets. Bitcoin is not a currency network. It's not a point of sale network. It's not a business, right? It is essentially a better version of a savings account that you can actually store real value in without any debt based on that. And it's got a long way to go. So we know the strength of it. It's been engineered to be actually better than a lot of these networks that we currently use, but it's still smaller than them. And that's the sweet spot trade, where you're getting in and you know that there's still fundamental growth to be had in this thing. Just some other short-term aspects to focus on as well, which I think are important. The first one is the Mt. Gox coins potentially moving. You can see that here. Mt. Gox, it is a lot of money. Not everyone's going to sell. So it may be a little bit of a damp squib, to be honest. We don't really know how many people are going to sell, right? So there's nothing really to trade around that because you don't know what the flows are going to be. However, there's two sides of every coin. So yes, there may be some selling from this, but what else do we have? We have stable coins starting to grow again. This is essentially like foreign direct investment. So you just have, money from that system flowing into this one. So the price has to move. Again, everything with Bitcoin or crypto as well is just the flows, right? So flows in is good news. You can see stable coins flowing in is typically pretty good news for BTC. It means that you've essentially got investors saying, we're putting the stable coins in, we're going to buy crypto. So as they flow up, does tend the price of BTC as well. As they flow down, you tend to get a little bit of weakness. We're just seeing potentially that weakness stop and actually some positive flows in again. Like I said, flows into Bitcoin is the only thing. So positive flows means the price going up. Not great news if you're trying to buy BTC, but it is what it is. And of course, great news for the Ethereum ETFs as well. Been approved. You can see the tickers here. So they're coming on, some fee waivers as well. So, Wall Street's coming in, foreign direct investment coming in, more flows coming in, more dollars coming in. That is a bull market. So we can just be patient and wait for all of this to play out. Now I want to come to two pieces of data, which I referenced at the start of this video, which I think show why Bitcoin is a desirable asset. It's been engineered with many features that are desirable to us, over and above the other tools that have been invented. Saving and investing is simply about taking the excess savings that you have when you're working and you're young. You produce goods and services, which are real wealth. Money has no value. Goods and services are real wealth, and you can produce more of that when you're young. And you want to save the excess for when you can't produce it anymore, so that you have those savings to draw on as you get older. That's investing. So we come up with all of these ways to try and do that. How do we do that? We need to invest in these investments that we're given that make returns. So most people would just look at the S&P 500 and the NASDAQ. Broad, diversified, decent returns. Those companies are going to try and protect themselves against inflation. That's great. They're pretty much the best savings tools that we've come up with right now. There are other ways to do this. For example, hedge funds and other types of mutual funds, most of which are very lecherous, actually. If you've ever looked at lists of these, look at the fees. High fees, lock-up periods, minimum investment amounts, right? Normal people locked out of them because they don't have the minimum investment amount. They can't lock up their money for that long, right? They're lecherous things. Now, these are the best performing hedge funds in the world this year. So the first 6 months of this year, these are the best hedge funds or public hedge funds that we can see, and the performance. Hedge funds are typically known to be, on the button, right? Trying to make these big returns, but their fees are usually extremely high. You'll have big lockups and big minimum investment amounts. So we can't gain access to them. Now, these hedge funds have returned decent results. So most of them because of the tech stocks, but you can see here, the best one is 54%. You got some, anywhere from kind of 10 to 15, 20% here. Decent returns that you're paying for professional managers to try and make you excess returns, paying high fees, high investment amounts, and lockups. Bitcoin's up 55% this year so far. Now that's after a drawdown from being at its all-time high. Now Bitcoin has no minimum investment amount. It has no fees and no lockups. You can trade it 24/7, 365. It's a more desirable asset, and the returns are good right now. That is why people are flowing into BTC. The other piece of data right here is fascinating as well. This is an insane chart. This is from checkonchain.com. Highly recommend this site, checkonchain.com, if you want to go and look at all of this data. What we're seeing here is the Bitcoin price versus the fiat currency system. Now, like I said, there's two ways to measure Bitcoin's success. Price in dollars, which is a good proxy, but also the amount of stuff that Bitcoin buys you. They're actually two different things because real wealth creation is not earning money. Real wealth creation is goods and services and saving that. What we can see also here is that the fiat system is expanding and the whole measurement of it is a joke. So really, your wealth, if measured in BTC, is measured in having to spend less BTC on the stuff that you want over time. So what you're doing is actually measuring human wealth creation because products and services are produced with less input and therefore get cheaper. And when you have a fixed currency supply, that's how you get wealthier. You have the same amount of BTC, but you just let human wealth creation drive the cost of things down. In the fiat system, it doesn't work like that. And so Bitcoin's price in fiat currency really should rise if it remains a desirable asset. So as you can see here, this is US debt to GDP ratio in white, and you can see that happening here, right? And it's obviously going up. Now, why is it going up? It's because human wealth creation actually drives the price of things down and should drive cost down. But GDP, because it's measuring the fiat system and an expansion system, actually has to be positive and go up. And so what we're seeing is when the free market is trying its best to drive cost down, you have to create more currency units in order to force GDP higher. Because remember, a lot of the things that we buy are actually mortgaged and have debt. And so, of course, you can't have that collapse, as we've seen many times over and over. And so what we're actually seeing here is as the free market drives cost down, you have to produce more currency units and force them into the economy to drive prices higher again. You need prices higher. You need prices higher to debase the debt that you took out previously. So you need prices up. And if you want to gain more in tax receipts, you have to drive prices up. So capital gains tax looks higher because you're driving the price of things up. Wages can go up, and so your income tax is higher, debasing debt taken out before. But it's really about wages going up less than the goods and services that you're forcing up through your stimulus. You're seeing debt creation and money supply expanding. And of course, GDP is going to go up on that. But that's not measuring real wealth. You're just measuring this weird fake system of fake money being printed, forcing prices higher. So yes, everything's going to go up in dollar terms and other fiat currency terms. But that's not real wealth. So what we can do with BTC is hold it and save it and wait for humans to create real wealth, so we spend less BTC over time getting the things that we desire. I have updated the Crypto Investor course this month. If you've got the course, check out the videos. They're free for you. I'll be putting the price up at the end of this month with the update, but I'll leave it at the original price for the next couple of weeks or so. If you're interested, link below. Bybit deposit bonus down there as well. I'm James, it's MoneyGG. Cheers for watching, and I'll see you in the next one.